The government is shut down, data is limited, and Wall Street is waiting. But Bitcoin just broke a new all-time high, smashing through 125,000 overnight. And while everyone's cheering, there's a bigger game being played behind the scenes. One designed to make you sell your Bitcoin. So it's either through panic or through greed. But smart money knows exactly how to get retail investors to part ways with their Bitcoin before the next leg up. So the real question is today, are you holding strong or are you being played? What's up, family? It's Coach Masi, and you're locked into the Daily Hodl, your home for Bitcoin truth. Let's get started. And we're going to start with what's shaking the financial world right now. Bitcoin just blasted through 125,000 overnight, setting yet another all-time high and proving once again that this is no ordinary bull run. So what's fueling this historic surge? It comes down to simple economics, scarcity and demand. Institutional investors, ETFs, and long-term hodlers like yourself are scooping up Bitcoin faster than the new supply can enter the market. Mining can only produce so much, and when demand exceeds supply, prices naturally rise. The result is a market that's not just hot, it's structurally bullish. And more importantly, the narrative is shifting. Bitcoin is no longer just a speculative asset. Increasingly, it is more viewed as a global reserve hedge, a digital store of value that stands apart from traditional finance. Even with the US government shutdown freezing federal data releases and clouding economic clarity, Bitcoin marches on. It doesn't pause for politics. It doesn't wait for Washington to reopen. The shutdown may delay job reports, inflation data, or other key economic indicators, but Bitcoin, it's going 24/7, proving that financial sovereignty doesn't require a government approval. And this new all-time high isn't just a number on a chart. It's a reflection of confidence. Confidence in an independent system, in a decentralized finance, and in an asset that operates free from the friction and uncertainty of traditional markets. For anyone paying attention, 125,000 isn't just a milestone. It's a statement about the future of money. Now let's zoom out. Even with the US government still partially shut down and official data being limited, the week ahead is absolutely loaded with market moving events that could impact Bitcoin's next big move. So let's break it down. Tuesday, well, you have the New York Fed inflation expectations, and that's going to drop. And then we have really, more than anything, it's a key pulse check on the consumer's view of future inflation. If people think prices will stay high, it will put pressure on the Federal Reserve to keep financial conditions tight. And that usually, well, it cools risk assets. But if inflation expectations fall, it basically signals breathing and opens up liquidity. And Bitcoin tends to be one of the assets that surge during that time. On Wednesday, we'll get the Federal Reserve meeting minutes. This is where we find out what the central bank is really thinking behind the scenes. How divided are they on rate cuts? How concerned are they about growth and whether they're quietly preparing to pivot? Every word in those minutes, well, they get dissected by Wall Street. And Bitcoin reacts instantly to even the smallest hint of policy softening. And then you have Thursday. All eyes will be back on Jerome Powell. Whenever the Fed chair speaks, markets move. And this time, expectations are sky high. Investors want clarity. Will there be another rate cut before the end of the year? Maybe even two of them. And a single phrase like monitoring inflation trends or financial conditions easing could light a spark across global markets. And that means volatility, also means opportunity, and likely what I believe is another Bitcoin surge. And Friday, if the government shutdown ends in time, then we'll get two major data reports, Michigan Consumer Sentiment Index and the September jobs report. These two numbers tell the real story of Main Street. If sentiment is weak or job growth slows, it could, well, confirm what many are already thinking, that the economy is cooling faster than expected. And when that happens, the Fed historically steps into a more stimulus approach, right? And then you have rate cuts as well. So here's the connection. All of this, inflation data, Fed tone, job growth, well, it feeds into one theme, liquidity. When liquidity flows, Bitcoin pumps. When fear spikes, Bitcoin shines. And this week, we could see both happening at the same time. You see, Bitcoin doesn't wait for permission from policymakers. It simply reflects the truth of the financial system in real time. That's why weeks like this, well, it matters. Because if the world's uncertain, Bitcoin is becoming the chart that tells the truth. And that's why it's important to buy your Bitcoin. Now, let's talk about one of the oldest games in finance. How smart money gets retail investors to sell their Bitcoin. There are only two ways to do it, in my opinion. First, They send the price crashing. They manufacture panic. They shake confidence. They flood headlines with fear. Bitcoin crash, regulation risk, mining ban. You've seen it before, especially if you're on X. People panic sell. And guess who's buying the dip? Institution, whales, and long-term believers like yourself. Second, they send the price soaring. Sounds strange, right? But when Bitcoin runs hot and everyone starts chanting 200K next, greed takes over. Real investors lock in profits too early, thinking, well, they've made it, while whales quietly keep accumulating. This is why conviction matters. Both fear and greed are tools to separate you from your Bitcoin. You can't be shaken when you understand the bigger picture overall. This is a multi-decade shift in global finance, not a weekend trade. Now, let's talk about one of the most absolutely critical stories of the week. Bitcoin OTC desks are reportedly running dry. If you're newer to the space, here's the quick breakdown. OTC stands for over the counter. These are private markets where institutional investors, hedge funds, and high net worth buyers move massive amounts of Bitcoin without triggering price swings on public exchanges. So when we're hearing reports that OTC liquidity is shrinking, that's not noise. That's a major signal. It means the biggest players in the game are quietly accumulating Bitcoin, and they're not selling it back. So here's the cause and effect. When OTC desks start running low, large buyers can't source Bitcoin privately anymore. That forces them onto public exchanges, where supply is already thin. And when deep-pocketed demand hits limited supply, price explode upward. This isn't just speculation. This is structure. This is economics. This is how bull markets ignite from the inside out. We saw the same dynamic before every major Bitcoin breakout in history has happened. Bitcoin at 125,000 isn't a fluke. It's not hype. It's the reflection of a tightening supply chain and rising institutional hunger for hard money. The fewer coins available off market, the more every remaining Bitcoin on the open exchange becomes a premium asset. I hope you bought yours already. So when you hear OTC desks are drying up, don't take it lightly. That's not just bullish. That's a flashing signal that we're entering a supply-driven phase of the cycle. The kind of phase where price action doesn't move because of retail hype. It moves because the whales are fighting for what's left. You see, Bitcoin doesn't just build wealth. It reveals character. When prices are up, it's easy to think you're a genius. But real strength shows up in your ability to stay humble, patient, and focused when things feel unstoppable. Because the same emotion that makes you want to buy the top is the one that makes you panic sell the bottom. Anyways, enjoy the green candles. Yes, absolutely do that. Celebrate the growth, the innovation, the movement we're a part of. But don't lose your grounding. The mission isn't just to make quick profits, it's to build conviction, discipline, and peace in the process. So, whether it's your Bitcoin stack, your financial goals, or even your faith, remember, strength comes from consistency, not emotion. Every candle, every correction, every new high is just another opportunity to sharpen your mindset and strengthen your resolve. You see, the smartest investors aren't the ones glued to every 5-minute chart. They're the ones who know their why. Stick to the plan and refuse to let emotion decisions really mess up their mind with fake logic. So while the world is cheering the pump, take a breath. Enjoy the moment, but stay focused on the mission to lead with purpose, to pray through pressure, and to hodl with conviction. So let's wrap this up. Bitcoin's at new all-time highs. The Fed's week is packed. The government's still shut down. OTC desk supply is shrinking. And the battle between fear and greed is raging harder than ever. But the real question is, are you staying disciplined through it all? Drop your thoughts in the comments. Do you think Bitcoin keeps climbing this week? Or are we due for a healthy pullback? And as always, if you got value from this breakdown, hit the like button, subscribe to the channel if you haven't already, and share this with someone who loves Bitcoin news, because that's what it's all about daily. This content is for educational purposes only and entertainment, but it's not financial advice. How you invest your money is up to you. Anyways, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you on the next one.